on here. Well, not as flat as I wanted it to be, but still pretty flat. So far we've managed to hold the trend from the prior low after the bounce. Although this isn't looking great. The fact that we haven't regained the prior high is really shitty. And over the last 2 days, the 2 days leading into SLD tend to be more bullish. But I think margin might be kind of fucked right now, so it may just lead to more selling than rather than more upside. Volatility remained fairly elevated into the weekend. It did come down about 7% today. And 3 month vol came down a little bit also, but not substantially. And with the dollar declining and yields still kind of pushing higher, I'm not entirely sure we're gonna see too much actual bullishness during that period, and then we get hit with SLD into the OPEX expiry, which will be next Thursday, not Friday, because there is no trading on Friday next week. I'm not really sure how that holiday is going to disrupt the normal kind of flow of things, but it's going to have some effect. Um, Here on ES, very very similar. I mean, we had bullish consolidation that broke down, that snapped back up, and we got some bearish consolidation that broke down a little bit earlier this morning, but recovered. Still lower high on the like 54.14 test. This range really. Um, no test of 54.25 yet. This isn't looking great for a reversal going into the weekend. I mean, obviously things could improve over the next 2 days, but this still really needs to push back out above 5,500, and so far it doesn't look great. Um, like really shaky, kind of shitty low volume consolidation. The only volume that we saw all day was on that sell off from the upside test. Dollar, I mean, not at the lows of the day, but still declining pretty rapidly with the top end of the curve moving up. The 20-year peaked above 5% today, and came back down on the Fed's announcement, which coincided very very well with the 10-year hitting about 4 or 5. Um, that range, like 4.5 to 5, expect to see a lot of government action because that's where bank risk starts picking up, and who the fuck knows what it looks like now, especially since the stress reports are done for. Commodity index actually did pretty good today. Oil pushed up about 2%. Gold still rising. Silver up. Copper looks like materials and agricultural mostly up too. So yeah, energy metals, precious metals, all doing well. Correlation spiked this morning, came down, but set a higher low, which might be interesting. So dispersion ended up not getting pushed quite as hard today as it did yesterday, which could be a sign that some of the dispersion trade is starting to capitulate. And leverage fell off pretty hard at the end of the day after it got that nice pump out of the bottom this morning. And we did see a rise in leverage on the short end as well, which is generally indicative of when we see bulls coming in. So far, this forward yield on volatility has kind of been the low over the last 3 days. There was a slight dip below, but overall, like 30% seems to be where like the forward yield on volatility is holding up pretty well. And so any dip below that, we might see some demand. Um, Move flat yesterday. Maybe probably down a little more today, but 3 month correlation still rising, so we might see a snapback in yields fairly soon. And yesterday, yeah, out of the money put demand picked up. Let's see. Correlation between VIX and cash VIX kept climbing higher today. So we're still not seeing a significant amount of short vol widening that spread at all. Now we do have the VX expiration coming up this Wednesday, so we might see more interest in shorting vol following the VIX expiration, because the forward curve does kind of push down over like the May and June expirations. But we're still very much in backwardation there, and it could be a while before we see that kind of normalize. And until it does, I mean, I don't think we're going to see any really significant short volatility positioning because the risk is just simply too high. Which means we'll stay in markets where volatility is elevated. 9.94% of the S&P OS 20-day moving average. Fed fund futures pulling back a little from two rate cuts into the June expiry. Or September. Sorry, this is the September contract. So two rate cuts by September, but pricing in almost three for the year at this point. So a lot of hope pinned on the Fed cutting rates right now, and that narrative's starting to get spun up more and more. Although the Fed has been, I think, beyond clear that they have really no intention of cutting rates until they see the impact from tariffs. And so the next meeting's in May. There's a little bit of time, but to get three cuts by end of year, we would have to get one. What, the August meeting, Jackson Hole, and then we'd have to get one in September and one in December, which seems excessive. If core inflation moves up substantially, the Fed's probably not going to be able to do much with the current rates for a while. And if it moves up too much, they'll have to raise. My butterfly at 65 paid off. Fun being Kenny. Nice, dude. Well done. Any significant data coming out next week? I didn't really look, but we'll cover all that on Sunday. 20th green day in a row for me. Thank you, Gamma Strike. That's fucking awesome, man. Does it make it bearable to live in New Jersey? Hated today. Loved the stream. Thanks, man. Yeah, today was not, for a 3% move to the upside. It wasn't very fun. How was CPI and PPI? So CPI and PPI came in low. They came in lower than expected. But they both came in so low, and the drop in core was so substantial that the explanation for them is not that inflation is coming down. It is that his demand has fallen off of a cliff. Not only on the consumer side, but the producer side as well. Man, you nailed the week. I came pretty close. I was a little bit off at the end. It definitely wasn't nearly as perfect as last week's, but it was pretty good. Actually, you know what? It's probably about within the same range that I was wrong last week. Because last week I was off like 1% to the downside. This week it looks like I was off 1% to the upside. 98 points to the upside. So pretty fucking good. Not gonna lie. I definitely banked some money on my own assumption that we would move up this week. I felt like last week vol got like way too over compressed, and things really just needed to snap back. And now that they have, though, and we're starting to see vol decline, it's very possible that after the expiration that. But I hope you guys made some money, at least on, assuming some upside out of this week. Anyway, thank you all so much for tuning in. I will see you Sunday for the members stream. And have a great weekend, everybody. Later.